Hi guys, how are we doing? So in this video, we're going to be going through an actual strategy, and this strategy is called the optimal trade entry. Now, this is an ICT strategy. So there's a trader called the Inner Circle trader, which actually came up with this strategy. So we don't take any credit for this. It is his concept. And we have took it on and just kind of put our own not twist, but we just found different things ourselves. So, but the actual strategy is himself. So if you do want to search up on YouTube and see exactly how he does it himself, you can. But we've kind of developed it and made it suit our needs essentially, and just looked for how it works for us, how we can get better risk reward on our trades, how we can actually increase our strike rate. I believe on EU, the strike rate for this actual strategy from the beginning of the year till May was about 87 to 90%. So it is a very, very high strike rate, like on this specific strategy. It's like one of the best strategies we do have because it's just so effective, and once you understand how to spot, it's so easy to spot. Now I've got a few examples we'll go through here, and yes, these examples are cherry picked, but they're cherry picked for a reason, just to show you guys how it's possible basically, and how this pattern does unfold, what you should be looking for, what you should be avoiding essentially, and just how you should be looking at the market when you do want to trade this pattern. So first things first, what you want to do when you trade this pattern is, first of all, we're always trading a 15-minute time frame. Now, the reason we do that is because the candles for the day are clearest. Like for us, they're the clearest on the 15 minutes. So when you are looking for this pattern, you're going to see the swing points the clearest on this time frame. You don't need to do it on this time frame, but we advise you do stick to a 15-minute, even at the start when you go out and look for this pattern yourself, just because it's the easiest. So all these examples I'm going to have here, we're going to play through price action in the past. So what if I was to come into the day and come into my screens just before the London Open, so I'm at my desk just before 7, and price action's got 6:30 here. So what I'll do is I'll mark out the Asian session. So I'll mark out the high, and then I'll mark out the low as well, because that's essentially where I'm going to be looking for price action to swing into, and for that trade to come into fruition. So if I just play price action, so what I'm looking for now, going to the London session, and the London session doesn't start, well, the London Stock Exchange doesn't open till 8, as we know, but trading around the London session does pick up from 7 o'clock, and we do see these moves start to come up and start to come in, and these candles do actually get bigger from 7 o'clock onwards. It's the same thing with the US session. When the US session doesn't open to 2:30, but from 1:30 we do see trading starting to pick up. So as I said, I'm going to have these two lines mark out the zone basically, which I'm going to be looking for price action to swing into in order for me to enter this trade. So as I have the high and the low marked out here, price action it's just doing its thing. It's just in the middle, and sooner or later, see, this is a first indication that we might get a trade in our direction. So this is essentially the first point of where I'm going to be like, okay, I might have a trade going on here. What's happened here? So the market has took up the low from 5:30 in the morning, as well as it's took up the low from the previous day here. So what from the previous lectures we had in understanding market structure, and the first few lectures in implementing market structure, what do we know has happened here? The liquidity below this low and below this low here has actually been taken with price action coming in here. So what I'm expecting to happen now is for the trend essentially to reverse, for that sign of reversal, what I'm looking for is price action to break to the upside, come back in, and then trade upwards from there. But my key criteria is, and I'm going to introduce you to 2 criteria here. So in this instance, this is something that will come discretionary for you. So you might be looking for one of these 2 things. For us, we either look at the market structure on them. So the last market structure on the 15 minutes. So this here is the last high in the market that I require to be broken for me to enter the trade. Or what we found is what makes the strike rate even higher is when price comes up and takes market structure above the Asian high. So what I said at the start is when you mark up the Asian high, Asian lows, if let's say, just go back here, if price action was to break to the upside here and break this high, then for me to even consider entering the trade, I'd need the price action to come down here and take this low as well, and then pull in, and then obviously take a trade to the downside then. I know we can't be confusing at the start, but we'll go through some short trades in a minute. So this is where it becomes discretionary for you. If you look for, what we found is if you look for market structure broken with the most recent swing, so emphasis is on the most recent swing in price action. If you're looking for that to happen, then you might be sacrificing some of your strike rate, but then you'll be in more trades and you will get more R naturally. But then if you're looking for the Asian high to be broken, as we will be in this example, then I'm sacrificing my R because I'll be in less trades essentially, but then my strike rate is going to be high. So the trades I am in, I'm confident I'm going to have 85% of them go to my target. So if we just continue, as price action is broken out here, took out these lows, I'm expecting it to break to the upside. Yep. So if carry on, went even further in that example, so it has really took out the stops in the market there. So now my next sign of confirmation is either break above this high or break above this high. Now in this example, we're going to be looking for a break above this high, above the Asian session high, what we're going to call it here. So price action carry on, strong, continues to be strong. See, there's strong movement of price action there. Some indication that the buyers might be stepping into the market. Price action carries on, comes back in. So if you were looking for this high to be broken, you could have entered the trade right there on the quick retest of the high, but that's not what we do in this example. So price action carries on, and it just trades within this range. It just trades within this range. So this is, I don't do anything. This is where I'm just observing price action, because for me to consider taking this trade, I am looking for this high to be broken there. Once this high is broken, then I'm going to implement the next steps to this strategy. So the cross. If we just carry on playing price action, so now we get the candle close above this Asian high here. So for me, that is the next signal that I will be looking for an entry to go long with this trade. As the market has come down here, obviously took these stops, and then it broke above the Asian high here. So the market's clearly broke above, closed on the 15-minute time frame, closed above this Asian high here. And now I'm looking for these trades to the upside, as I believe there is the first sign of reversal, something we talked about implementing the temporal disposition. So my next step is I actually grab the fib tool, and I want to fib. Let me just delete this so it's clearer. And I actually want to fib from the low here to the high of the candle. But what you'll notice is the candle might continue going up. So we might see price action coming here and then continue going up, continue going up, continue going up. So you might be thinking, which high will I have to fib from? And this is where you're just going to have to keep adjusting your highs. If you see, let's say, price action come in, make a high, drop off, then make a smaller high, continue to drop in, most likely this will be the first high that was made will be your point, as this high hasn't conquered the high that was made previously. But also what you should be aware of is this, when price action breaks through here, through this high there, ideally it should be between 12 and 1 p.m. Why is that? As I said before, that's when these New York traders come in. You want to see this high established before half one to around half 3 is the perfect time for this entry, and this is why it's called the optimum trade entry, because that's when there are the most traders in the market. That's when you get the crossover from with the London session and the New York session. That's really when all these traders are in the market there. So you will see these entries come in to the market at half 1, sometimes on the dot. So price action might be trading up here somewhere, so which is 33 pips from your entry. I'll talk about the entry in a minute. Yet it will literally just drop. Let's go back. Yet it will literally just drop instantly because these traders will push this price action down here to then go off long. So if I just carry on and look at, so this is half one actually already. So I'll keep moving my, go back. I actually keep moving my fib to the last candle card, and when I get the candle closed, that's when I'm going to move my fib to try and fib from. So this is where the first sign that this actually might come down to my entry. So I leave my fib there, and then your entry on these trades is always going to be the 61.8 fib. I know we don't use many tools when it comes to technical analysis, but the fib for this entry is perfect. Why is it such a good entry? Why is it such a good entry using the fib? It's because it's a psychological level. Many traders will see a pullback to these levels because they're just self-fulfilling prophecies. If enough traders believe that price is coming back to 61.8 fib, then enough traders will actually push price into the 61.8 fib before it goes up. So as I was saying, we have now made the fib from the low of here to the high there. Yep. And this is when I'm going to actually put my order in. So I'm confident that with this move below this market structure there, price is going to actually come into my order at the 61.8 fib and then continue to shoot upwards. So this is where I enter my order in the market. I'm going to enter my order at the 61.8. My stop is going to be in line with the low. Why is it in line with the low? Because if the trade actually breaks this low, then I'm wrong. Like, obviously, if it breaks this low here, it's going to form a lower low in the market, and I'm clearly wrong on the trade. So that's where I'm wrong. So that's where I'm leaving my stop. With my targets, now targets are a bit more discretionary. What we tend to target is either this high here, so the high that's been made when the market structure has been broken through the Asian session, or we tend to target the previous day highs, which will be there, or sometimes we target intraday levels. So you can see there's a nice level in the market that has been left right there. We could target that as well. But this specific example, I'll just target this the top of the fib there, just so you can see what actually happened, because I can't honestly remember what happens on this trade. Just know it's an OT. Anyway, so yeah, the high's been made. I want a 0 fib on there, and now I'm looking for price action to come into this level. This is where this is going to test your psychology big time, because most of the times, I said, it is 1:15 already, and you will see this trade being filled instantly. So what you're going to see from up here is price action just absolutely plummeting into your level. You will see bearish candle after bearish candle after bearish candle after big bearish candles. So it will make you scared. I'm not going to say it won't make you scared, but that's when these trades come out to be the best trades, because 90% of the people will be scared themselves, so they're not going to take this trade, whereas you're going to be in that 10% and you're going to profit from this, because you would have back tested this strategy, and you will know what actually happens most of the time. So seeing moves like this is not going to bother you, because you're actually looking for moves like this because you know you're going to get filled on your order, and it's going to go to target most likely. So as I said, let's observe what actually happens to price action there. See, we got bearish candle turn into a pin, into an indecision candle, another pin left in the market near pin. Just play it through some price action, and then just starts to come down. Really look at this candle there. I'll replay that for you just so you see what we mean by the 61.8 fib. So the price action is here, which is about 10 pips, 9 pips from entry, sorry. So here, that's just after, so New York opens at 2:30. This is the 2:30 to 2:45 candle. So this next candle here is going 2:45 to 3 o'clock candle. So really, when these New York traders do start coming into the market, this is what happens. So look at the rejection from the 61.8 fib there when I press play. Market comes in, bam, rejection. We get you can't argue it's a pin mod to the upside. So rejected there instantly, you're in profit. Market comes in, looks heavy, but then it just turns. It turns out this 61.8 fib. This is what's so crucial for this strategy. 61.8 fib is really what you'll be looking at. Market comes in, bang, rejects this. What happens next? Nice bullish candle. Market comes back in again. Does it retest the entry? I'm not sure. And then boom, comes back in here, trades up here, and eventually you hit target. So by 5:45, I mean, you could have been out with these candles there when around this Asian session. It's completely up to you. Maybe you don't want to hold it that long, but eventually so you got entered. I'll just move this here so you can see. So you've got entered at 3 o'clock and you've hit target within 2.5 hours there. And you can see price action just drew back here, grabbed my liquidity and just completely shot to the upside. And this is what tends to happen in trades. Sometimes you might hit your target within 30 minutes. I've seen it happen before. We've had targets being hit in 10 minutes when the market just absolutely plummets into your area of business and leaves a 40 pip bearish engulfing candle, let's say, and then just completely turns on the entry. I've seen it happen before. It is possible. So this is where you just got to go back and actually backtest these. So you just know, so you know what's happening essentially. So I'll keep saying so. Let's move on to the next example. In this next example, we have a look at euro dollar, and I'll pause price action again at just before the London session comes into play. Let's mark out once again our Asian highs and lows. So in this particular case, it wouldn't be this one; it'd be this one there. That's the low. Just mark it here so it's easy to see on those straight lines. Yeah, do the same up here. So let's play price action and see which way it actually goes on this day. Keep playing. As I said, I don't need to do anything here. I'm just observing it until it breaks the Asian session, either the high or the low. And that's going to be this first sign of this liquidity coming to the market. So market comes in. There we go. Breaks the Asian session and instantly comes back into here. So what has it done there? So it's took the liquidity above this high. Took liquidity above this high. So anyone selling from here essentially could have had the stops there, could have had the stops there, but then they've got took out by these big players in the market looking for that liquidity essentially. So our next step is what do we wait for here now? So in this example, I think, I'm not too sure. We'll see anyway. I'm going to be looking for this low to be broken. This example, it's the price action has come in here, made this low very nice, and then shot straight into it. So to me, that's a nice low to trade off from. So in this particular example, I won't be looking for the Asian low to be broken. I'll just be looking for this low to be broken, as I believe we might get a shorter pullback and then price might plummet. So yeah, I'm looking for this low to be broken now. So I might set, if I'm not at my desk, I might set an alert so that I know. Let's say if you do work in the day and you do want to trade this pattern, you could set alerts at all these levels. It's really simple. I've got a document which, if you do want, I'll be able to send it you how to set alerts on these levels, how to actually actively trade this without actively being at your screen, because it is possible. So yeah, now we're looking for this low to be broken here. Let's play price action and let's see exactly what happens. So market trades up. It doesn't trade past this high here. What you want to be vigilant about is do that. Price action can break past these lows, but it has to be within the first 3 hours of the London session. So if price action breaks above here, maybe takes these highs, and it's still before 10 a.m., then yeah, this pattern is still valid. Generally, what we tend to see is any price action that broke this pattern here after 10, you won't see the market structure being broken to the downside. The pattern will either continue trading here, or it will just continue going to the upside, and you won't actually be tagged in on this trade. So it's important you do pay attention to the time. Just think, when are the most liquid time periods in the market? When are these traders actually at the desk looking to take positions? And this is what this strategy does. It narrows down the areas where traders come in, because you see this liquidity being taken, and then you get that move to the downside. So as I was saying, the London session comes in, takes this high of the Asian there, and then some of the highs here as well. So just carry on, and we are looking for this low to be broken here as we established. Price action carries on, play it more. There we go. Now we get a candle close, which is crucial. You don't want a rejection from this area. You want a solid candle close, which we've discussed in the Understanding Market Structure webinar. Solid candle close through this area there. So what am I looking for now? I'm looking for my fib tool. So I'll get my fib tool, grab the high to the low. Yeah, as the candles close, now I'm looking for that entrance 6 to 8 fib here. So to me, maybe that has formed a low. So I'm now confident that might be the low. So I'm going to put my order in the market. I could put my order in the market before this candle there. I'm just going to have to be vigilant and actually observe price action closely. Just to, if the low is now made, let's say if the low is made down here, that's when I'm going to have to come in and move my fib to this candle there. My entry is obviously going to move, and my target's going to, and my entry is going to move. So my stop loss is going to be bigger, and my trade size will have to be smaller. So you have to always be vigilant of your capital management and your risk management when you do these. So if I just go back and see exactly what happened. So now this has made the low. So now I'm confident that we're going to get an entry on here. Plot my 60-on-8 fib. Sorry, plot my entry on the 60-on-8 fib. Stop on the high just there. That's not just on the highs. That's just on the lows. Move that tiny bit up here. And now my target, let's say the Asian session, or it can be more audacious with this one. Target the previous day low, just see if the price action actually gets there. So yeah, the low has been established in the market. Now we're observing price action. What time is it? This is 10:30. This low has been made. So not the ideal time for an OT, but it could still be, because what we tend to see is price action may actually come in here and then just hover around here before these New York traders come in. So when it gets to 1:30, you might see a massive spike downwards then, because these New York traders are now in the market. So let's have a look what actually happens. Trades upwards. So now we've traded for these 38 fib. I am confident this has been the low, so I'm confident sitting on my order there. Market comes in, doesn't tap me in there, and just taps me in there. So I'm going to move my trade, my P&L up to here, so you can see that I've just been tagged here. So what happens next? So market actually comes into 79 fib, rejects it, which is a good sign. Again, also pin bar to the downside. Then the market does this, and it actually comes through, closes through 79 fib. Now I'm still not wrong on the trade. I'm wrong on the trade when the market closes through here. This is still the higher high that has been made in the market. So to me, there is no sign of reversal for me to get out. I'm still comfortable sitting in this trade. I will not be like not comfortable that it may go to stop, but sometimes obviously it does. Even with a 87% strike rate, you'll still see 1 in 10 trades, just under 1 in 10 trades go to your stop. So I'm still confident on this. I'm still on this. And then luckily the next candle that comes in straight to entry. Near enough a bearish engulfing, didn't take out the top, but I'm still confident that we are going to see this move to the downside. And then we get this beautiful bearish candle there come in. It's continues to have another massive bearish candle, and see instantly. So within, just before the New York Open, we've had a, how big is that move from the entry? A 34 pip move in about, so quarter past 1, we got tagged in at 11:30. So in just under 2 hours, you can see you grabbed a nice little free on this trade. In this particular example, I was only looking for this area to be broken. I wasn't looking for the Asian low to be broken, which to me just seemed too far away on this particular trade. But this is how I spoke. This is where you are looking for, what was I going to say? You are looking at whether you want to look for the Asian high to be broken to get that higher strike rate, or whether you're comfortable with a lower striker potentially. I'm not saying it happens all the time. You might backtest a specific pair and find that it does work with just the most recent high and most recent low being broken. It's completely down to you. Go out there and test it yourself. Now, the first example was US dollar, Japanese yen. This example is euro dollar. The next example is pound dollar. So we've actually found that this strategy works best on any of the majors. Like, it does work on some yen pairs, so I know it works quite well on the euro yen and pound yen, so you can test these. But yeah, the majors is where it works, because that's the most liquid market, so that's why we trade this the most. So let's go through this one and see what happens again. So price actions paused at 6:30, just before the just before the London traders come in. Mark up the high once more, and then I'm going to mark up the low, which I believe is the start of the Asian session, right? So as you can see here, there's no clear, if we were to break to the upside, so if the market was to come here, there is no clear swing in this area until the actual Asian low there. So I know there's no swing in the Asian low, but that all we need is the Asian low to be taken out. These Asian traders to actually be taken out of the market. But yeah, if we do break to the upside on this trade, I'm not going to be looking at any swing in here. I'm going to be looking for this actual low to be taken out. Let's see what actually happens. As I said, market breaks above here. So that's our first indication of we are going to be looking for these shorts. So I do want this area to be taken out there. Let's do this, carry on quickly. And yeah, the market starts to eventually trade downwards. And it's come into this area there. Ooh. So has it closed below? That was 33.055, 33.053. So this candle there has actually took up the low of the. Now I said when we see, so on this particular example, when we're looking for the low here, we want to close a market structure. When the market comes into the Asian session, as we are seeing here, you don't necessarily need a close. That's what we found. That's what we found for our back testing. You don't need a close of market structure below this Asian low. You just require a close of market structure below or above the most recent swing point in the market. So as I said, the market has made this low. That's where we get our fib tool from the high to the low. Spread this across a bit. And then 61.8 fib is there. So you can see this is 9:30 in the morning. So this is quite quick. It's happened. Once again, not optimal time, but we are still going to be comfortable entering an order there. 61.8 fib. Market's going to come into here. It's a 20-tick stop. And then we're going to target, let's say, the previous day low, which is just here. There's not many lows in the market after that, which I'm comfortable targeting, in my opinion. If we break this low, which has been formed at low liquidity at 9 o'clock, then I'll be happy taking nearly 2.5 hour on this trade. So let's see exactly what happens. Market trades downwards, Oh, then we get tagged in here. So you do get a close of price action through this 61.8 fib, but to me, as I said, I'm not wrong on the trade down here. So even if price action decides to trade up here a few times before the 2 o'clock OTE perfect time and then drop, I'm going to be comfortable sitting on my hands and just watching this, because I know my strike rate on this trades and I know the chance of it being successful. So it's just replay price action. See, it comes ever so close here. Does it actually take me out? And then it takes me out. So on this trade, fortunately, it was a loser, but these things do happen. So as I said, I've only got a few examples here. Price action was very, very strong in this example. Maybe the market needs to take out this low. Maybe the market needs to take out this low and then come back in with 618 and shoot off, but don't exactly. This is something you'd have to analyze in your journal. So even with me backtesting these, as you can see, they don't work 100% of the time, but the times they do work, they are very, very successful. So let's just play for price action, see what actually happens. So on this particular trade, we've just been caught on the wrong side of the market as price action actually comes in here. So potentially what you could have actually looked at, just notice this. I'll just delete a few things here. Yeah. You could have looked at it the other way. So maybe this was too early for the London traders. So this was 7 o'clock. Maybe when we took up this low here and then broke above the Asian high there, market then came down and shot for the previous day high here. So see, even I'll just notice this now. But this shows you how actually good this pattern is when it does take up the Asian session. If I just put my fib on there, as you can see, if I have my 61.8 fib entry on here, start below the low, and then my target would have been previous day high, let's say. See, so if I did trade this from the other side, so maybe it was my mistake. I thought there was enough liquidity being picked up in the market from this high here, but actually what the market did is picked up liquidity from the Asian low. So once you see the Asian session being broken from the upside and from the downside, you have to take into account which which way the market you think is going. On this particular occasion, I was just on the wrong side of the market. But if I was to flip this round through my back testing, I'd have realised that, okay, maybe if the market does come down in the middle of the London session, so at 9:30, when there obviously are more traders in the market, just think of market participants. When people push price, well, these market participants will push price into areas they want when there's a lot more of them, and these lows are going to be much stronger than these highs, essentially, because there are more participants in the market here than there are over there. And when the Asian session is actually broken here, as you can see, the market comes into 618 fib and just shoots for your target. So by you'd have entered the trade at 12:30, and by 2 o'clock you'd have picked up nearly 2.4 R, which would be another beautiful trade. But yeah, just beware. Even though I got it wrong in this example here, where I just thought this was enough liquidity in the market, but you just have to pay attention to where are these traders in the market, what they're likely to do. Just be wary of that. But once again, pattern takes out previous day high in about an hour and a half. And then the last example, we're going to go through what I've got here. So I'm going to be more vigilant on this one and not be so quick. So we've got 6:30 candle. Let's mark out our ranges again. So we've got the low here once again, and then we got the high, right? So as this is GU, I want to see the low of the Asia session being broken, because this is what I found works for GU. When we're looking for price action to come here, if we do break the high. Alternatively, if we break the low first and then price action comes into there, that's what I'm going to be looking for longs. Let's see what happens. I'm going to be more vigilant on the time now and actually see what happens in the market. So this is once again, so 7 a.m. the market stays here, 8 a.m. London open, the market's still there, and then it can, I think, comes down. Yeah, so between 7 a.m. and 8 a.m. So I am confident that this is the high that I'm going to be trading from. So this is where my stop's going to be. And then now I'm waiting for this low to be broken down here. Market comes down, kind of trades around here. Does it break the low? Let's have a look. Yeah, broke the low. Didn't have to close through it, as I said. So now I'm going to be looking for that fib to 61 entry around here to the downside. So let's get my fib tool from the high to the low. So what time does it actually break that? So 10:15. So not as busy as 9:30 as we've seen before. Not as many traders in the market now. Just move this across. Continue play price action. So once again, I'll move my fib down here as this is the new low. Does it break lower again? Maybe or maybe not. Let's have a look. No, so now I'm confident that this is actually the low that's been made in the market. What times are here? So 12:15, we are coming towards that 1:30, that optimal trade entry execution time. So let's put my PN out up here. Stop's going to be there, on the high, 61 fib. Let's just target the low of the day for this. So don't actually target the low of the previous day. No, let's target the low of the previous day. Stick it there. So now we're waiting for that 1:30 time. Why we're waiting for that 1:30 time again? That's when these big guys come into the market. That's when you see these money flow around the start of the New York session. And also it's when there's news releases as well at 1:30 in the US. So these traders do come in and trade. Like, we are adamant you shouldn't trade news if you don't know what you're doing. But if you do actually take on board what we teach in the fundamental course, you'll soon start to realize some of this news is actually priced in. And when you see a big move to the downside, the market comes in, there's a news release, and the news release is perfectly in line with your trade. It's perfectly in line with where you thought the market's going to go. So be aware of that. I'm not saying do it, go out and do it live now. No, back test it, see these optimal trade entries, see these OTE trades in the past. Look what news events happen. We use the economic calendar, go back on the economic calendar and see, oh, there was a news release at 1:30. I got entered at 1:30 and then trade went perfectly to target. Just be aware of these, like be aware of identifying days when there are strong news events and how the market has responded in the past. So as I said, we are waiting for that 1:30 time, maybe earlier when the market does come in and tag us in. So let's have a look what actually happened. Trades downwards. Does it come up? Yeah, so this is 1 o'clock, the market comes into here, and then you would have got tagged in on this bang on half one candle, 61.8 fib, and then straight away from that level we see a massive move to the downside. So it goes target smashed. So quarter past 3, it would have got in the half one exactly. Look at that perfect respect of price action from the 61.8 fib. You do see there's a lot actually, which presents you with another opportunity we'll talk about in a minute. So it would have got nice 2.4R once more. And you do find you do get nice 2.5, 3R. Sometimes you do get 4R with these moves, these strong moves in the market, where the market retraces half one, between half one, half 3, up to trade entry, big players step in and then just push price where they want it to go for the day. So this actually presents you with an opportunity where you can have a play around this with the stop placements. So if you do spot that market comes to 61.8 fib and then shoots downwards, why not put your stop sometimes at 79 fib? So if my stop was at 79 fib, I would have got over 5R on this trade. Now, there is room to improve this strategy, like with a lot of things. We do what works for us. We're keen on having a high strike rate. You might be keen on getting the best entry possible, so you might have a tight stop going in, and you might see you get that 10R when you see the price being respected from the 61.8 fib. Go out and explore it. Implement the first steps we've taught you here, and then go out and explore the strategy, because there's a lot you can do. Come back to us with what you can find, because it will be exciting. And if you get the basics, if you understand, okay, liquidity has been taken from this high, and then liquidity has been taken from the Asian session here, where is price likely to go? Where are these big players likely to push price into? What areas? Identify those areas and then target those entries, and just hopefully you can go out and kill it. But yeah, if you do have any questions on this, or you want to schedule a one-to-one where you can go through and backtest this yourself, or you have any more questions in regards to actually altering the strategy yourself, let us know. We can organize a call. And then if you do want to check out how the origins of this actual strategy, you can have a look at ICT as it is his concept. But yeah, hope you guys enjoyed that one. I'll catch you later.